So this is the wrap-up for the live market open for February 29th. It's Monday, the end of the second month of the year, and a very busy day in general. The market mood is not so good. G20 decides one meaningful thing, that countries should warn each other when their policy could cause devaluation, basically allowing for some devaluation. But but they didn't decide on any meaningful steps. I don't think it was totally unexpected. Usually they just sign on these nice statements which don't mean anything. I mean, let's help global growth, and how will we do that? We never know. Hungary Parliament in Ireland doesn't add to positive, doesn't make things better. Chinese stocks are down, Japanese stocks are down. Worse than expected data from New Zealand. So market mood is a bit worse today. It's quite different from what we've seen on Friday, because on Friday, in the United States, we had slightly better US GDP. The Fed's favorite inflation figure beat. Other figures were positive in the United States. But in the Eurozone, Germany fell back to deflation. That feeds into today's figures, and that has had a negative impact on the euro. Okay, so let's look at the charts before we mention the events. Charts show us that euro-dollar resumed its falls. Yeah, it made an attempt to recover. The Friday's losses went all the way to resistance at 109.60, and then it's falling once again. 109.10 perhaps is weak support, followed by 107.70 and 107.10. High resistance at 110.70. I'm happy to see that euro-dollar is trading more in a better technical manner. Pound dollar suffered from the Brexit talks, which also were on the agenda of the G20. Everybody warned how Brexit could damage the global economy, not only Britain. Anyway, 138.70 is the current level. 138.40 is around near 7-year low. 140 is resistance. Dollar yen, slightly worse market mood means that the pair is falling, that the yen is strengthening. 114 was the high when things looked better, and now we're under 113. 111 is a very, very, very strong line. It's a double bottom. Okay, dollar CAD, still the Canadian dollar still looks better because oil is still okay. 135, very round number, is support. 136.20 is resistance. Better oil prices help. Australian dollar is significantly lower on worse corporate profits. Worries about China. Worries about if the RBA could hint about a rate cut or something like that. Ranges, the lines to watch are 70.40, 71.40, 72.20, and 72.80. Kiwi dollar was, now it's recovering just a bit from support at 65.50. Still within the range. It made a move above the range last week, but it's back down once again. Business sentiment and building consents, both badly disappointed. Okay, let's talk about the events for today. We have net lending to individuals in the UK. Should have some impact, not too much. Political concerns are left front and center. Eurozone inflation. Key figure, expectations are for 0%. That means 0.1 could help the euro recover. Minus 0.1 could push it even lower. We're 10 days from the ECB's decision, and the tension is very, very high. At 3 GMT, US pending home sales, 15 minutes before that, Chicago PMI, both are second-tier figures. But we move from second-tier to first-tier, top-tier figures. In Asia, we have the Chinese official PMI at 1, expected to show moderate contraction. The independent, the Caixin PMI, manufacturing PMI, expected to show a bit more significant contraction. Has a big impact on the global economy, on the mood. Really, really important. We'll talk about that tomorrow, of course. Australian rate decision at 3:30. No changes expected in the outside chance of a rate cut. The Aussie will collapse. But we might, more realistically, we might get a hint about a rate cut in the next meeting or the following one, okay? And perhaps last but not least, Bill Dudley of the Fed speaks at 4:30 GMT. And let's see if he says something meaningful, if he sees the glass half full or half empty. Okay, so before we move towards the exits, let's see if we have more comments here. Getting bored with the Grexit, it's all hype. Grexit, Brexit, who's next? Yeah, Ireland, that now we don't have, we have uncertainty about the government. Yeah, oh, thanks, Artem. Link rate hike probabilities in Australia if someone needs that. Great stuff, thank you very much.